everybody? Good morning, good morning. Lots of stuff moving. We got stuff popping, we got stuff dropping. And let's get into it. Let's talk about it. Morning. All right. So, start out here. Of course, all trading involves a substantial risk of loss. Past performance not necessarily indicative of future results. This presentation intended to be informational, educational, fun. Is not a recommendation to buy or sell any financial instrument. Remember, I may be completely full of crap. If you desire personal financial advice, you need to hire and consult a financial advisor that has a fiduciary duty to take care of you and give you advice based on your financial situation. All right. All that said, welcome. Remember, if you want to chat, you got to be a subscriber. So hit the subscribe button, and I'll let you chat with me. And then, while you're at it, you might as well hit the alert button, the notifications button, so you get alerted when I go live on Monday morning. Every morning before the market opens, I do this. So, all right, getting a few alerts here. Everything looks pretty smooth. So, let's jump into it. Now, S&P 500 3-day chart. Bringing it over here. Nice, big, fat hammer there. That looks like rejection off of that retest right there on the 3-day chart. The roadmap line is that dashed line in there. If you're unfamiliar with that, I have some videos on YouTube and I talk about it all the time, so just stay tuned. You'll learn about the roadmap line. But the daily was on down around 4,000. This one was right in here. We kind of bounced in that vicinity going up, kind of expecting a higher high at this point. Now, yesterday I identified some key levels here. We didn't even slow down at the roadmap line on the 1 hour. We went right on up to that trend line and actually found resistance right at that where that high volume was yesterday. And we just kind of parked right there. We tried to break on through, couldn't do it. There was supply there. That was the highest traded volume area right there. So once we got there, we hit supply. It was actually after hours when right as Amazon announced earnings. This popped and then it kind of went sideways and drifted off a little bit back down to the roadmap line. This is a classic roadmap line test. I would expect a bounce higher to a higher high from here before we could possibly see a deeper retrace. So just be cautious. Now the 5-day volume is down here around 4,100. We could see a 618 retrace of wherever we, from this low here on April 26th up to whatever high we make today possibly. We could 618 retrace back down in this area after that point. That can happen all overnight, over the weekend, whatever. Just be aware, be cautious. After making a higher high here, we're probably due for another retrace. All right. In Q, had that target. We blasted right up on through. We found resistance right at the 13,300 area where I thought that would be the max move. That was on the Amazon earnings. We popped, found resistance, and slammed right back down. Some people blaming the CFO blabbing. Looks like NQ got extended and sellers came in. That's exactly what happened. I think a lot of people expected Amazon to be bearish on their earnings, and I think it caught some big players unaware. They probably went to action trying to push it back down. Looked like the short sellers attacked like in giant volume on some of the things I track. So even though it's not a large percentage, they provided a lot of liquidity, especially in the low liquidity environment that we had last night. So we'll look at the Amazon chart and kind of what happened and where I expect it to go today. So PCE coming out. Core PCE was expected to be flat at plus 4.6 year over year, but got something a little different. So we can look at the actual results there, just coming in a little different. So this is the Fed's favorite number, and I don't know what's going to happen here. So month over month basis, we're seeing that coming in a little bit red. And then Exxon smashing expectations, reports the strongest Q1 ever. So these earnings coming out too. So we're seeing a lot of companies beat. This is not consistent with going into a recession, maybe coming out of a recession where earnings expectations are at the basement and we're starting to smash expectations. That's what I'm seeing right now. I think we're probably coming out. Good morning, Jason. Hey, everybody. All right. Moving on. Let's actually look at some charts and some predictions. So NQ, right up to those prior highs. Probably looking at a breakout and a rally up here. This looks like on the super small time frame that I had a minute ago, the 1 hour. This looks like kind of a little mini 1, 2, 3, 4. Probably get a 5 extension and a retrace before we can push on up to get on the run up here to that 13,800 area. So that is about 600 points higher than we are right now for NQ. And it could probably take out to another 2 weeks or so maybe to get up there if we kind of are on this pace. But of course, we can just pop up there in one day if the market gets a little crazy. I mean, you can see that right there. 12,100, 12,100 up to 12,900. So like 800 points in 2 days. That's entirely possible. So we can make this very quickly. Don't be caught unaware. And I do expect some resistance right there. That 13,800 area on NASDAQ comes from these highs back here in August and these highs back here from March, April of 22. So it's kind of a twofer in that zone right there. S&P 500, this is like QQQ. Divide by 41, you get the QQQ price roughly. All right. If you're unaware how that works, right there. So NQ is the NASDAQ futures. ES is the S&P 500's futures. This would be like SPY if you're trading ETFs or SPX. Seeing a little bit of red this morning, but hanging in that, we're back to that box. We bounced right off the blue, right back up in. I mean, that was a beautiful, beautiful thing right there. My next expectation is for this to at least test the top of the range. If we just break back down, we're probably going to at least the roadmap line, if not trying to push a little bit lower down to the 4,000 area. All right, so just know your parameters. Keep it in mind. So far, we're holding the lows here and holding into this box. This is whereas, this line right here comes from the consolidation we did before we did that last pop. We couldn't break out higher, and then we rolled over, came back down to that supply right there, found some support and bounced right back up in the box. So the next expectation after a little bit of rest is probably going to touch the top of the box again, if not try to break out and make new highs. So kind of expecting that we're on the path to 4,300 at this point, but we got some stuff to work through. So morning, Harry. Morning, Lee. Morning. Mara's not really moving this morning. Crypto's not moving, so not much to talk about for movers for the day on Mara or crypto. Russell down back to the bottom of the box, held the bottom of the box. It does have the possibility and potential to extend down to about 1670. So, morning, Sledge. And so just keep in mind that the small caps could outperform to the downside just a little bit still. Like if we start getting below this box with a close, with a daily close, then I expect down. Otherwise, hold the bottom of the box. Expect to go right back up and test this area right up in here one more time, around 1800. If we can break out above that resistance, get above the roadmap line, we're probably looking at a swift rally back up into this 2000 area where we topped out back here in February. That's our small caps. If you're unfamiliar, that's IWM is the ETF for that one. These are my three big indexes I watch. ES, S&P 500, NQ, NASDAQ, and Russell, small caps, Russell 2000. All right, RTY. Any questions on those? All right. If you got them, ask them. Dollar index, just kind of keeping a track on this. We are consolidating at the lows. Probably going to push lower, down into the 90s. That looks like weakness to me, and I think that we could see some breakdown and the stock market rally, and that's a typical correlation, but don't think because the dollar drops that the stock market has to pop. That's not the way it works. It's a typical correlation, but it's not like a rule. So it's what you would expect, but I wouldn't base trades on that sort of thing. I don't ever base trades on correlation. I'll base trades on seasonality, but not correlations between two completely different things. It's like, what constituent of DXY is part of ES? I mean, dollar. These are currencies. Currencies have, while everything's priced in currencies, they don't have any constituents that actually directly move stocks. All right. It goes through a whole convoluted worldwide thing before it gets back to affecting stocks. So it's a kind of a correlation, but it's not a causation. It's not a relation. It's not a guaranteed thing. Just keep it in mind. All right. Not sure how or why CMG is still on the list, but hey, still looking for that pop. Amazon got popped and then slammed. We can look at it right there. Popped. The CFO started blabbing, slammed back down. This can be a resistance, and we can pop again. So just be careful. It's my little 60-cent trade is not over yet. Bought calls on that yesterday. I booked a 300% gain on the calls I bought 3 days ago, yesterday, and then rolled back into some 60-cent calls, $60. Looking for this thing to pop back up. We'll see what happens when the market actually opens. You can see this was a relatively low volume. We got a little pop right there on the volume and then nothing. I think some people got caught on the wrong end, needed to short the whiz out of it, and got some push down. We'll see when the volume actually picks up. And we're sitting at minus 1%, but they also beat by like $2 billion, almost $3 billion. I mean, that's a crazy amount of money right there on the revenue and making money. So what's the problem here? Okay, your cloud infrastructure is a little light, but who cares if you're going to beat by $3 billion and make a bunch of money? I think it's going up ultimately. We'll see what happens here. It's an interesting slam down. It may need to make one. That may be it. That can rally. So be careful. Be careful betting on this to go down. This thing may rip out of here once we get a market open. Top, this one, I don't even know what was happening. Yesterday closing at like 20, and today overnight we were seeing a pop all the way up here to like 260. This thing's ridiculous. Whatever's going on. Looks like a GME type play right there. Although it's all happening overnight, it's not happening over days. It all happened overnight. Looks like it's going to come right back down. I would be freaking careful on that one. HKD, lots of volatility overnight. And on the daily, though, looks like a dangerous, volatile piece of junk. So getting a nice pop, but that's still all below the resistance and probably going to go lower. Snap getting crushed on earnings. I think I said its inability to even push into the roadmap line probably is going to lead to lower low. That looks like where Snap is headed. INTC back up into the roadmap line here. If it can push up through the highs, that's great. They announced losing money. I mean, come on. They did surprise on the top, lost less money than expected. They did surprise on the bottom, brought in a little more revenue than expected. Not huge, not $1 billion. We're $0.7 billion, but they did lose money. They have kind of been losing money a little bit. This is an environment where losing money is very costly because money's not cheap. So be careful. This one could just be a little retrace before the push on down to the target. I would not trade this long until we break out above 34. Pins also getting hit a little bit. And they made money. Beat by 8 million. Not too bad, but obviously their outlook wasn't super strong. Got slammed right back into this consolidation and the roadmap line zone there. Got to break out above the highs, above the purple line to get more upside. Otherwise, we're just going to keep consolidating on lots of these that are just stuck in this vicinity. We're just going to keep consolidating sideways until conditions improve. FSLR, I expected a retrace back to the roadmap line. Looks like we're 3/4 of the way there. That's what you see. I mean, that hit resistance 1, 2, 3, 4, like 4 or 5 times. Come back to the roadmap line. Yeah, surprise. Disappointed on the top, disappointed on the bottom. Solar business is tough right now. There's a lot of new competition, and I mean, we're seeing that like EMPH. Ouch. Probably going on down to that 145. Generac. Can't remember the ticker. GNRC. Yeah. All these looking pretty rough right now. That one's probably going to make a lower low also. Got earnings coming up next week. But then you got energy that's rocking. XOM, record profits. I mean, look at that. Beaten by almost $1 billion. Beautiful. Morning. Yeah, Schwiz. YouTube doesn't like it when it cuss, so I try to keep my language in check here. Sorry for the alerts. That was the boss. Hold on 1 second. Come on. No. All right, nothing important at the moment. AUPH looks like just consolidating, trying to break up. It's got resistance right up here at 12. UCAR, not enough chart to do much with. That looks like it's going on down. IPOs tend to have a bearish correction, whether it happens immediately or it takes a few months into a year. Eventually, it will make a lower low before it can build constructive prices higher. Are a few exceptions, but the vast majority of new IPOs tend to go in the garbage. Tends to be a corrective pattern. MEGL looks like popping up to 4. That's a, what? Jesus, 350% pre-market. Ridiculous. I would expect some kind of retrace, but it may keep popping. I mean, it dropped out of the sky, it looks like. And the market just opened, it sounds like. AGBA, sideways. TCJH, wow, that's another huge pop, 60%. But, again, garbage kind of stocks. KALA Pharmaceuticals, dangerous. That looks like it's a consolidating wedge type thing. It can pop, it can drop. I would be cautious trying to chase that one. FRC, getting a little pop, but still looking pretty bad. That one's probably a buyout from some bigger bank. NET, if this one can break above 66, probably heading up here to this 88 area, 84, the 80 area, I guess more accurate. Otherwise, we start breaking down below 55, which right now 44. It's probably going to lead us down to extension to 28. So unless this just suddenly recovers, that's a point where we're breaking down, probably going to extend down, possibly even to 16. So not so great for net, not holding there. Beating on the top, not disappointing on the bottom. Their outlook was probably poor. While it can bounce right there, that's not looking so great at the moment. Looks like that was a corrective, that was a corrective, and then probably going to extension lower. So despite that count and that, the evidence is suggesting that we will see, a lower low, somewhere in this zone. Right in there. Yeah, probably going down. Going down in a blaze of glory. And then COF, also looking like it may go lower. It's like an expanding wedge right there. That's a rough pattern. I would be careful. Definitely be careful. All right, bias for the day. Kind of a sideways consolidation a little bit. We're back in the box to where we hung out for 7 or 8 trading days. I can't remember how many days it was. Seemed like forever. We're back up in that box, kind of retesting the bottom. We could get a rally up to the top. We're not going to go up huge probably. So that's like a 40-point upside. If we get down below this with any kind of strength at all, we're probably going to get like 150-point downside. So we're still back in that coin flip zone. Kind of sideways is my primary expectation, unless we start breaking out or breaking down. I mean, that's unfortunately that's kind of today's a rough day. I was kind of excited when we got down here. I was like, this is bounce potential. Now we're back up into the coin flip zone. It's tough to really guess what happens next. Now this looks like we retraced overnight and probably going to get a higher high on NASDAQ that can pull ES back up to the top of the box, but I'm not sure we're going to see a breakout yet. It may not happen until next week. Now we do have FOMC meeting. Circle around to outlook for next week. Jump on, refresh here. Coming up, we do have. I didn't pick the whole week. That was brilliant. Brilliant.org. Let's see. Yeah, FOMC statements on Wednesday, right there. Fed's funds rate. So be careful. This is coming up next week. We may kind of hold until that happens, and then we'll get the breakout or breakdown. So this is, be cautious. Looks like we're expecting quarter-point raise. And forecast quarter-point raise. We'll see what happens. Be careful. That's coming up. So we do have. I did say I'd look at PCE real quick before we run away. And we had core PCE coming in steady month over month. Employment cost index coming in at 1.2%. So that one coming in line. So we're not really popping or dropping today. Core PCE just coming in line on that one. Year over year was a little different. This is month over month. So Chicago PMI coming up at 945, and then consumer sentiment. So we got some stuff that can keep moving the market here for the morning. All right. Have a great day, everybody. I'll be back again with you on Monday. Remember, next week is FOMC week. Big mover potential. Stay tuned for more. Keep coming back. We'll keep you updated, and have a great day. We'll see you again on Monday. Bye for now.